are putting the spotlight again on GST and how that impacts various companies. You just heard from an apparel retailer, a value retailer. Let's talk about footwear now. GST on footwear, which is priced, up till 2,005 rupees, has now been lowered from the earlier levels to just 5%. So how much of a boost could this be for Bata? Gunjan Shah, MD and CEO of Bata India, is with us. Mr. Shah, thanks very much for joining in. So we want to sort of understand a couple of things, three key points. First, we want to understand the impact of the GST rate cuts. Then, of course, we want to understand, what happens to incremental sales due to lower rates and the overall festive season demand outlook. So if I could start with the first, if you could break down currently your product portfolio, how much is below 2,500 and how much is above 2,500? So to that extent, what sort of a benefit do you envisage at this 5% rate now?
Great. Lovely to be here. Good morning to the viewers. Answering your question directly, basically, it should be roughly around, I think we are still working out the details, but about 80% of the portfolio is below 2,500. So that should see the benefit passing on to consumers. And we are obviously committed, as has been spoken by me in the past also, to pass on the benefits to the consumers. We do expect this to have a significant impact on the momentum, which had obviously got negatively impacted when it had moved from 5 to 12. So I think this reduction is very, very welcome. And obviously, thank you to the government, Prime Minister and the Finance Minister on taking this bold decision.
So Gunjan, help us map that in terms of sales growth. So let's say like to like, if you talk about like to like, what were you expecting this festive season? And now with this bonanza coming in from the 22nd, what is your new estimate for festive season sales?
Yeah. We are still working out the details, but what we are looking for is definitely a significant boost driven by volumes, right? So we have been working over the last, I think, about 4 to 6 months on driving affordability and therefore volume-backed growth. We have already taken a lot of, pricing decisions on that front over the last few months. We have, in fact, last week launched a campaign which is already preempting this entire piece on GST, which is live right now across all the 2,000 store network. So we are looking for obviously a significant delta driven by volumes. We will have to see how this pans out over a period of time, but I think the festive season and this is timed perfectly well for a significant jump ahead.
So what, 15% growth, less than that, more than that, like for like?
Yeah, I wouldn't want to comment on specific numbers to you, but as I said, I think a large part of the portfolio does get positively impacted, and as we are in the process of making sure that we pass it on, we should see a significant boost on it. That's the expectation.
All right, hi Gunjan, good to see you, Ben. Well, is September 22nd enough time for you to go ahead and adjust stocks at the new rate? Because there could be a problem in the interim, right?
It can be. So we are working overnight on this. Already there is, as I said, we had preempted some of this. So we already launched a campaign. It's across all our stores even now as we speak. So I think I'm pretty confident the team is working on the back end to make sure that this gets done, both from a consumer facing perspective as well as from a technical perspective as well as taxation. So I'm pretty confident we should get this implemented.
Gunjan, hi. Below can you break this up below 1,000 and 1,000 to 2,500?
It's basically, as I said, below 2,500 is roughly around 80% of the portfolio, right? I'll hazard a guess, but it should be about 50-50. So 40% below 1,000, 40% between the two.
Okay. The reason I asked that is because, our margins on cheaper under 1,000 and, 1,000 up to 2,500 also different in that sense?
Not materially different. There are, depending on the category, etc., right? Because, but not very material difference. There is obviously about 2,500 is a slightly higher delta on margins for sure.
Okay. Where do you see this? Okay, so you're saying, and you're not putting numbers to it right now, right? I mean, how many, what is the volume impact? But I'm assuming it'll show up more in the under 1,000 priced products.
Even more so, because just to give you a perspective, that is what went through a significant jump on taxation about 2.5, 3 years back, right? That's when moved from 5 to 12, and that did take a toll on it. So below 1,000 was more than 50% of our portfolio. That has dropped to less than 40, as I just mentioned. So we are expecting obviously a lot of bounce back happening on that direction also.
and unorganized to organized. I mean, that is a shift which should also accelerate because of this.
Obviously, that should be a natural conclusion of this, right? We will be able to offer, better experience, better quality products, etc., to the same segment with more affordability. And as I mentioned, we have already, initiated a lot of those corrections already over the last few months in reaction to the consumer stress. And I think this GST welcome is a very welcome announcement. I think will only aid this going forward.
Off the cuff, do you have any numbers with regard to how much is the unorganized market for the industry on the whole?
There are several estimates on this, but roughly around 60 to 70% of the market is unorganized.
Oh, so then it provides a big opportunity, this rationalization of GST. What about store expansion? If you could tell us, what's the plan out there, even the e-commerce plan? How do you see both these two going ahead if you have some goals, some targets?
Actually, just to give you a little perspective, e-commerce as well as a large part of our store expansion has been a large part of driving growths in the last few years, right? On store expansion, first and foremost, I think a large part of the focus has been driving, expansion into tier 3 to tier 5 towns, right? That's where you see a lot of urbanization and therefore a desire for a much better retail experience. The franchise model of us is now almost about 650 odd stores, right? And we are expecting there's no reason why we should not be pushing for 1,000 stores over the next, let's say, about 2 to 3 years. So there is a lot of action that's happening on that front. On e-commerce, I think it's been a fastest growing business channel for now multiple years. It's now more than double digit in terms of contribution. So we expect that to continue. There is no reason why we should have any difference in terms of momentum on that channel.
Okay, all right, Gunjan, we'll leave it there. Thank you very much for joining us. Really appreciate your time here on CNBC TV 18. That's Bata with perspective on their business. So significant impact, not quantifying the actual numbers. Of course, I mean, these things, of course, will evolve. And, of course, cut time perfectly as the festive season. I mean, it's, the Shraddh period gets over and you get into the festive season. So this is definitely going to give a bump up. Stock did very